Oh man, shock inflation just in, and it's bullish. Bitcoin getting itself back above support here at 41,800, a good bounce from yesterday. But more importantly, inflation is continuing to trend to the downside, and market participants are now aggressively pricing in this idea that we could be seeing rate cuts around the corner, and risk is strongly rotating back on. In this video, I'm going to break down exactly what those CPI readings were just a day ahead of tomorrow's critical FOMC meeting, where Jerome Powell decides not just whether we're going to get a rate cut or hike, or whether we're going to get a pause, but also decide the plan for next year. And that's what the market is going to be looking at. So much to get through. Smash the likes. Do not forget to subscribe. Guys, if you want to be part of our trading community with chart analysis and altcoin analysis, make sure you check out the link in the description, ijazcrypto.com/TG. Now, we're going to kick off here with Bitcoin up 1.45% here, getting itself back above this yellow horizontal support. Very, very important. And trying to recover after yesterday's horrible dump here, flushing out the leverage. We covered that off in yesterday's video, breaking down from this symmetrical triangle and crushing all this leverage, $350 million worth to be precise. But today, we have literally just got in our CPI reading, and it came in at expectations. Inflation is now softening. If you look at the headline US inflation rate, this was expected to come in at 3.1. It came in at 3.1 exactly. If you look at the month-on-month run rate, this came in a little bit hotter. It was expected at 0%. It came in at 0.1%, but still decent leveling off of inflation. If you look at the core inflation rate, which strips out food and energy, expected to come in at 4, and it came in at 4%. If we look at the core month-over-month, expected at 0.3, and it came in at 0.3. So to all intents and purposes, this hit the money on the head in terms of what the market were expecting. And so now if we rotate over, you can refresh this and see that 94% of the market continue to think we are not getting a rate hike tomorrow. We will get a pause. But it's more important than that. It's now about whether markets think we're going to get a recession. Do they think we're going to get a soft landing? When do they think we're going to get a rate cut? And what's the plan for next year? Remember, investors are forward-looking, and we need to be forward-looking as well. If we want to place our investments, if we want to decide if we're in the market or out of the market, we need to look at what's around the corner. And guys, I really need people to understand this is far more important right now than the Bitcoin spot ETF. I know this is controversial, but most of the pump we saw here recently was not to do with ETF. It's to do with risk rotating on. And that is why we're seeing the traditional markets move as well. It's not just about Bitcoin and its spot ETF. No. Yes, that plays a factor, but this is mainly about the world and the global liquidity. That's what this matters about. You can have all the spot ETFs in the world. If the Fed are not your friend and they're increasing rates and they're reducing liquidity in the economy, there's no money to go into crypto and there's not going to be any movements on the prices. So it's really important that markets and market participants like you and I understand that the market will rotate risk on when they're expecting rates to start cutting and cutting meaningfully. And we've got some data around this. There's just been the new CNBC Fed survey, and I want you to take a look at this. Let's look at the headlines here. So they expect the Fed to begin cutting rates in June. So the majority of participants on this survey expected that by June, we will start to see a rate cut, which is very, very interesting. Respondents see the probability of a soft landing at 47%. Okay, that's up 5 points from the October survey, and they lowered the probability of a recession. So more people are now starting to think, hang on, Jerome Powell is managing to maneuver this big aircraft and get us ready, lined up with the runway for a soft landing. So it's very, very interesting. Let's look at some of the other things here. The Fed needs to begin laying out a roadmap to rate cuts that may represent tighter policy since cuts will be lagging the decline in inflation. Okay, look at this. The markets have prematurely priced in high odds of rate cuts starting in Q1, but we do expect further steady disinflation will lead the Fed to begin rate cuts around mid next year. This is the bit I want you to focus on. Remember a couple of days ago, I switched over to the CME Fed Watch tool, which is this one here, and I clicked on March, and I showed you guys that market participants here, you can see 42 82% now of the market expect that March we're going to see a rate cut. Now, what the Fed survey is saying, and remember, this is generally more sophisticated people participating in these surveys, including economists and strategists and analysts. They're saying, hang on, we think market participants are getting too excited here. They're pricing it in for March, but we think it is going to happen. But maybe by June, July time, around that time, we'll start getting our cut. So it's important that you guys understand that disconnect as well. Okay, so a lot of market participants are feeling really positive and euphoric, and some of these more strategists and analysts are saying, it might take a couple more months. Either way, we're close, right? We're in the ballpark of getting closer to this rate cut. I still believe Powell has the memories of 1970s, which is the Paul Volcker period, in his mind and will be more stubborn in keeping monetary policy tight for longer than markets want him to be. And this is the balance, right? Jerome Powell has continued to come out and said our Fed rate target is 2%. We're now sitting at 3% on headline and we're sitting at 4% on core. And so the question is going to be for him, does he keep going? Does he keep plugging on, being aggressive and, risking a hard landing, a recession and huge unemployment? Or does he start taking his foot off the brake now, leaving it paused for a while, let it coast for a bit, let the lag start to kick in and see if inflation really starts to cool down to 2%, 2.6, 2.5, that kind of region, and then decide to start cutting? Because remember, there is a lag. With monetary policy, there is a lag. We don't know how much has still got to be priced in terms of rate cuts, which we've already had. So that's really, really important for us to understand. Now, if we jump in here into the markets, we can see here 1.3% on the day here on Bitcoin. It's nice, right? Nice big fall yesterday. Again, I said that was healthy. What's wrong with that fall there? We came down to support. We're testing some key levels of support. You can see our EMA ribbon. Look at that, guys. Perfect touch of the EMA ribbon, nice opportunity to buy the dip, and now we need to see a response from Bitcoin. And this response is primarily going to be focused on what happens tomorrow, which is our FOMC meeting. And at that FOMC meeting, it's not just about whether Jerome Powell pauses or not. Most of the market expects him to pause. But we're going to get a report with it, which we'll break down together. Make sure you guys are subscribed. Make sure you've got your notification bell on and all that good stuff. It's called the Summary of Economic Projections. And in that Summary of Economic Projections, each Fed official in that FOMC meeting tomorrow will draw what they expect interest rates to be at each of the periods next year, right? It's called the dot plot. And we're going to look at that together to see, okay, where is it that Jerome Powell expects to start price, and other Fed officials expect to start pricing in these rate cuts? That's what the market's going to pay attention to. Right? Most of the market is expecting a rate pause tomorrow. That's not the thing. We need to look into the detail because that is what can decide whether we're going to get a strong bounce here and move to the upside, or whether we're going to go back deeper into our EMA ribbon and get a deeper pullback. Now, if we're talking about a deeper pullback, what are some of those key levels, right? I mean, the first level is obviously using this EMA ribbon, right? Coming down to 40,000, fine. Can we head lower down here into 39.1? 38? All of these are really nice price points. If we get any of these price points here, I'm looking to buy into this EMA ribbon because I'll be expecting a strong bounce here given the change in risk appetite we're seeing recently. Now, more expectedly is probably would see a bounce here, right? Are we just going to see strength come straight into the market now? Are we going to bounce? Remember, when we bounce here on Bitcoin, you need to create a higher high. You can't just do this and curl over again, right? It's very important that if Bitcoin wants to bounce now without any further pullback, that not only does it bounce, but it creates a higher high above 45 and does something like that. Okay, so if you see Bitcoin bouncing and showing weakness here, it could be curling over again, and that's not going to be a good look for Bitcoin in the short term. Now, if we jump onto the weekly chart, you start to see that we got even more room to play with. I mean, if you look at this, Bitcoin could tumble all the way down to its EMA ribbon here, and we're still going to be fine, right? Let me just show you this level on the EMA ribbon. It can come all the way down here, 33.8, and it's just a retest of its EMA ribbon. So however we want to look at it here, the market is quite strong. We're in a strong position. More importantly, however, is this, the dollar index. Dollar index has started the week in the red here. Now, of course, a lot of this is going to depend tomorrow on the FOMC meeting. But if we can keep risk on, if we can see that there is a path to rate cuts and Jerome Powell isn't too hawkish, this could lead this dollar index to get powerfully pushed to the downside. And that is what we need for the crypto markets. What I don't want to see happen is the dollar index reclaim here on the weekly and try to go on another surge. That will not be good here for crypto. Now, whilst this is all happening, guys, I am actively trading this market. I've taken a whole bunch of altcoin trades as well. If you guys want to see some of my analysis, if you want to see exactly how do I set up the patterns, because I teach you guys all those patterns in our course, right? IjazCrypto.com/ ijaz.TA. But if you want to see me actually execute on them and how I actively trade the market, then make sure you're in our crypto group, ijazcrypto.com/TG. Hope to see a bunch of you guys in there. But until then, make sure you're in there, post extra alpha in there, post extra updates in terms of macroeconomic updates and the rest of it. And tomorrow we will be going live for the FOMC meeting. Thanks for watching, guys, and I'll see you in the next one.